Every cycle has its winners, and every giant has its challenger. Today we're looking at the ultimate David and Goliath story of 2026. On one side, Caterpillar, the nuclear-powered aircraft carrier that owns the ground it stands on. On the other, Terex, the transformer that's trying to rewrite its DNA. One is betting on deep pits, the other on city streets. This is HDIN's strategic audit, the giant versus the transformer. Let's talk scale. To understand these two, you have to realize CAT's revenue is 12 times larger than Terex's. It's like comparing a professional league to a high school team, but here's the twist. CAT's margins are nearly double. They aren't just selling more, they're making way more on every dollar. While CAT plays deep in resource and energy, Terex is pivoting to something much more stable, your local municipality. The party is over. The post-pandemic boom has hit a wall. Interest rates are freezing up equipment rentals. That's Terex's backyard. Meanwhile, geopolitical friction and new tariffs are threatening to put a $2.6 billion tax on CAT's global supply chain. If you think a big backlog is a safety net, think again. In 2026, efficiency is the only moat left. Time for a quick check on how hard the money is working. Using the DuPont formula, we see a massive gap. CAT's ROE is a staggering 41%. That's elite. But don't be fooled. A huge chunk of that is fueled by their own private bank, CAT Financial. They're essentially lending their customers the money to buy their own trucks. It's a self-sustaining loop that Terex just can't match. Look at this leak. CAT lost $1.1 billion just on pricing last year. Why? Competition in emerging markets is brutal, but look at what saved them. Services, parts, maintenance, and software. They basically give you the razor for a discount so they can sell you the high-margin blades for the next 20 years. If you want to see a monopoly, look at a mining pit. CAT doesn't just sell iron here, they sell uptime. These autonomous trucks don't need coffee breaks or health insurance. Once a mine integrates CAT's autonomous system, switching to a competitor is like trying to change your phone's operating system while you're in the middle of a call. It's nearly impossible. Caterpillar is quietly becoming a software company. Their nearly $800 million bet on RPMGlobal isn't about engines, it's about the mining OS. They want to own the data that tells a mine where to dig, how to dig, and when to fix the truck before it breaks. It shifts them from a one-time paycheck to a recurring subscription. Smart? Absolutely. Now let's look at the transformer. Terex is doing something radical. They're shedding their skin. They sold off their crane business and bought into waste management and ambulances. Why? Because even in a recession, people still produce trash, and people still get sick. They're trading high-growth volatility for boring, beautiful stability. Trash is the new gold. Terex's environmental segment grew over 100% last year. These municipal contracts are like an insurance policy for shareholders. They provide a floor when the economy dips. Plus, their margins here are actually better than their famous genie lifts. Who knew garbage could be so profitable? But it's not all sunshine. Every strategy has its price. For CAT, it's a looming $2.6 billion invisible tax from tariffs. Their global hub model is their greatest strength, and now, potentially, their biggest weakness. For Terex, it's the debt. They've borrowed heavily to fund this transformation, and at current interest rates, that's a very heavy backpack to carry. If we look ahead, the recovery is in sight, but it's not coming from a housing boom. It's coming from the Infrastructure Act. Both companies are positioned to catch this wave. CAT with the heavy earth-moving, and Terex with the specialized municipal fleets. We're forecasting a steady climb through 2027, provided the trade wars don't escalate further. The next 5 years are about the green and the autonomous. By 2027, watch for Terex's electric Genie fleet. By 2028, expect CAT to have over 1,000 autonomous trucks running the world's mines. This is a marathon, not a sprint, and both are running in completely different directions. Finally, ESG isn't just a buzzword here, it's a business model. CAT's Riemann program, turning old parts into new ones, is incredibly high margin. And Terex is literally reducing city carbon footprints with their electric waste fleets. They've even linked executive pay to these targets. They're betting that being good will also be code for the stock. So what's the final word? If you want a fortress that dominates the Earth's resources, you look at Caterpillar. But if you're looking for a transformed growth engine that's built for the stability of modern cities, Terex is your play. One is the giant, the other is the transformer. Both are essential for the 2026 portfolio. This was just the surface. For the full 50-page deep dive, financial models, and our proprietary data, head over to HDINResearch.com or drop us an email at sales@HDINResearch.com. We help global leaders make sense of the heavy machinery chaos. Thanks for watching.